Alright, so what is going on, guys? Today we're going to do a market review of what happened between the week of 18th of September 2023 and 22nd, which is which was a wonderful week. So starting off in the DXY chart, this is our weekend analysis. So before the market even opened up, I'm going to go into the dollar index chart. So, inside the dollar index, if we go into the weekly chart, what we saw and what we wanted to see is this level being drawn to. And also, I told you guys I want to see the 6th of March consequent encouragement premium wick. This one support price higher into this buy side. And then I said if we get into the above the buy side liquidity on a more longer time period. But I just want to see price go above this, treat as support, and then ultimately into the 21st of November 2022 weekly CB low. But with the economic things that are going on in the world, I'm not saying that the market is driven by that. That is just a smokescreen for the algorithm to act out. But I'm not going to talk about that in here. So we wanted to see this level being hit or being used as a drawn liquidity. Now, I told you guys that we wanted to see the consequent encouragement of the premium weekly wick to be as a support for price this week. And as we can see, price went into it, almost into it, and then higher. So we went higher like we wanted to in the dollar index, which means that that was indeed a risk-off scenario for the index features, which we have here. I told you guys, look, this is the level, this is the analysis that I've shared with you. This is the one they in DXI Indies analysis, which I'm gonna zoom in right now. This analysis I told you, and this is the before the week even opened. Told you guys that we saw this big wick into this weekly bystander balance as an efficiency high and into this straight to the tick, and we also have the bodies of the candles, which are a big sign that the institutional order flow is indeed going to go to the downside. I told you guys that if we are indeed, because I could be wrong and I can still in the future be wrong, but this time I wasn't. In my analysis, I told you guys that if we are to go to the downside towards this sell side, I told you that I want to see first. I want to see this consequent encouragement of the weekly premium wick, which is this one. I want to see it act as resistance into the downside, and I told you that we can use this inside the Nasdaq. I told you that we can use this as a drawn liquidity and not as a target yet. I didn't expect this. I mean, I expected volatility and a big run to the downside because I also expected a quarterly shift and also a run into this inefficiency right here. But inside the ES is the most interesting thing because, again, I told you weekly buy side imbalance has inefficiency. Right here we have one, two, the body candles, and we also have the swing high being made here. So with this wick here, with the body closing right here in the same place in which Nasdaq was, relatively, if we are comparing the Nasdaq to the ES, we have the consequent encouragement of this premium wick. I want to see it again act as resistance and then ultimately send price lower into this level of sell side right here, which, if you look in the ES chart, it was this level of sell side here. So it was that level, which we bridged with success. So the Nasdaq, the daily chart of Nasdaq, I told you right here. If you look inside the analysis, I've told you that again. This is going to be acting as a magnet for price to go to the downside. But intraday, I told you that I want to see targets like this low here because it wasn't breached in the day of the recording. I told you that these consequent course. Look at the video. It's up there even before the week happened. Consequent encouragement of the daily discount wick. I want to see that act as resistance to the downside. This is exactly, if we go into the Nasdaq chart, this is exactly what the price did. Look, first thing, manipulation to the upside, and then ultimately dropping lower to the consequent encouragement of the daily wick. And I want to see intraday, because if I'm bearish, if I'm using this as a drawn liquidity, I want to see intraday targets, as I told you, like this low, the volume imbalance here, the little inefficiency here, the volume imbalance here, but not because we're inside of it. This inversion gap here, this rejection block here, the consequent encouragement of this wick, this wick, then the consequent encouragement of this wick, and the sell side intraday targets. But generally, I would want to see price, and it indeed did this. I wanted to see price into this sell side. Into the ES, same thing. Same scenario inside ES, having that small buy-sell imbalance below the market, which we're going to progressively use as intraday targets. So, yeah, and also because this is Nasdaq, I'm gonna put ES here. Look at what ES did. Went right below that low and almost into this weekly buy-sell imbalance as an efficiency high, which I wanted to see being targeted. But and also an interesting fact is that we also had thank God it's Friday, which means that the price will come back. Not this one, my bad. The price will come back ultimately into the 20%, 25%, or 30% of the weekly range if we have a down close candle. So this is the power of three concept, but viewed on a weekly chart, which means that we are going to see some kind of return back near the low of the week, and we can also see it inside Nasdaq right here. And basically for the intraday charts, what I took a trade inside ES, but I want to show you the real deal, which I wanted to do a breakdown for exclusively for my Telegram members, which you can actually join in the description below. I did let me just put this because I don't have the annotations anymore. It's frustrating. I had this 15-minute inversion gap, and this is Friday, right? Inside Friday, inside the ES, look at this low. Friday, 22nd of September 2023, 9:45 low. If you're looking at it comparative to the Nasdaq, it's this low, right? The ES breached that low at 130. Inside the Nasdaq, look at where we were at 9:30. At 130, my mistake. So if we were here and we didn't get to this low yet inside the Nasdaq, then I would use that as a six sister concept, which also is the relative equal lows. But I would use this low as the six sister concept in which the ES took it, but the Nasdaq didn't. So I'm gonna use that as a strong but a strong drawn liquidity to the downside, knowing that this low is going to be the most probable target for this down movement. And how can I enter if the price has already went down? So basically what I see here is that during the day we actually just went right into this thank God it's Friday 30% of the weekly range, plus we just went to this new not new but opening range gap from Wednesday, which was not quote unquote completed, and we also went above this regular trading hours buy side, and that gave me a sign with this strong movement to the downside that this is a balanced price range right here, one passing, two passing, and therefore knowing that this has to be taken out because the ES took it and ES also took these lows and the Nasdaq didn't. But because we knew that this had to be taken, we wanted to see speed, and therefore this was a balanced price range. So we did not want any return back into this fair value gap. Therefore, when this candle closed at 130 below this inversion gap, I'm gonna drop down to 1 minute chart and I'm gonna look for an inefficiency, knowing, guys, knowing that the price doesn't even have to go to the high of it, which was this inefficiency right here. I utilized inside the 1 minute chart. I thought that I had the recording for it, and there's no reason for me to lie. I thought I had the recording for it, but I didn't. And that was so good. This was so good. And then ultimately dropping below this, shifting the market, balanced price range here, and then ultimately lower. But this right here, this trade, setting short inside this fair value gap, knowing that we have a balanced price range above, so therefore price does not have to have any big retracement to the downside, to the upside, my mistake. Knowing that, and knowing that we have to get to this low that the ES did not get into, that was a major confluence that we could have a good stop placement above these inversion gaps, consequent encouragement, because this is what we know. We want to see it act as a level of resistance. So therefore, what's above this consequent encroachment of this 50-minute inversion gap, this swing high, so therefore that is going to be our stop loss, because we know that inside a 15-minute chart we have that buy side, no, why, what, no, that balanced price range, and ultimately targeting this low right here. So, and I want to see something, if I'm correct. Let me just put a projection, then see something. Yeah, but that was pretty much it for this review, guys. I hope you enjoyed this one. I'll see you in the next one. Peace.